investing and then savings. Are they different? Yeah, they are. I'm Clay. Let me explain. Now, these are terms where they're very introductory, they're very basic as far as personal finances are concerned, budgeting, wealth building, making money, all that sort of stuff. And at the core though, they're actually very different. And they're different for really one word as far as, Clay, look, I gotta go eat lunch, just hurry up and summarize this. Fine, the main difference here between these that everything revolves around is risk. Now, risk of what? Well, risk of what's going to happen with your money. So your money here, and then let's just put a question mark by it. Meaning, what could potentially happen to your money? So let's look at savings real quick. Savings, the risk is very, very low. So low, we'll call that risk. Because you put your money in a bank, and if you're, in the United States, these accounts are insured up to $250,000. So if it's $250,000 or below, and your money is sitting in a savings account, then hey, the risk is basically non-existent. Now, of course, you could always take to the extreme and be like, well, what happens if the country ends in the world? Well, in that case, yeah, there's that risk there that if the country just implodes or whatever, then yeah, that money would be gone. But assuming that the country is okay, given I'm American in the USA, assuming you think that the USA will be around, then yeah, there is very little risk in savings. Now, how are you going to make money with that is, well, you're going to get what would be called an interest rate, and that always fluctuates. But that is a way where, all right, yeah, you are saving money. That money has very low risk, and it's going to be there for you. Now, as far as growth is concerned, it'll grow in a very, very small way. So risk is low, but then when it comes to growth for G, there's going to be very, very little, I can't say zero growth, but there's not going to be much growth at all. Now, on the flip side though, as far as investing is concerned, well, investing, and this can go in many different ways, but we'll just use a typical one, is you invest into, let's say, the stock market. Now, there's real estate invest. There's all sorts of investing out there. You could invest into a business that you're starting off, but we'll just say stock market. Now, stock market, and the way it works is things go up and down. So there's just things go up in value, things go down in value, back and forth, back and forth. But the point being, what is the risk here? What could happen to your money? Well, there's actually a lot of risk. Now, when I say a lot of risk, I mean compared to a savings account, because there is no insurance that, hey, if you put in, let's just call it $100, then whenever you want, you can come back and you're going to have $100 waiting for you. In a savings account, that'll be the case. But investing, that is not the case. There is risk associated with it because there is no guarantee. There is no insurance. There is nothing that says whatever you put in as your investment amount is going to be what you get back out. But that's also the catch-22 in a good way, because there's high growth potential here. I mean, if you just think back to, let's just say somebody that invested into Amazon, let's call it 15, 20 years ago. I mean, what they put in, yeah, there was risk, because back then it was, is Amazon going to succeed, or is Amazon going to just kind of go fall by the wayside? But the people that invested, sure, they took on risk, a lot of risk compared to a savings account. But you know what? Maybe you've never heard of Amazon. I've heard of Amazon, but the growth there has been huge. So yeah, you take on more risk, but the growth potential is also much higher. And that's really the difference. It breaks down to these two things, from savings to investing. The savings, very low risk, and you have very low growth potential. Again, yes, it will grow, but very, very small. As far as investing, there is risk. You could lose your money. But because you're taking on risk, there is a much higher growth potential. But at the end of the day, like I said, it all comes back down to that word of risk. But that is a difference between saving and investing. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.